On Monday, March 10th, 2025, Wall Street faced one of its most challenging days in recent memory, with the Dow Jones Industrial Average tumbling by 891 points, or 2.08%, to close at 41,171. This sharp decline reflected widespread investor anxiety, sparked primarily by renewed fears surrounding President Donald Trump's tariff policies and their potential impact on economic stability. The Dow's drop was not isolated, as other major indices also reported significant losses. The broader S&P 500 index declined by 2.7%, settling at 5,614.56, while the technology-heavy Nasdaq Composite experienced an even steeper fall, plunging 4% to end at 17,468.32. The market-wide sell-off underscored deep concerns about escalating trade tensions and their potential ripple effects across multiple sectors of the economy. Among the most severely affected stocks was Tesla, whose shares plummeted by an alarming 15.4%. Tesla's drastic decline drew particular attention, as it marked the company's stock price falling roughly 50% below its all-time high. Investors grew increasingly cautious amid uncertainties surrounding global trade relations, supply chain disruptions, and tariff-induced cost pressures, particularly affecting technology and automotive sectors reliant on international markets. The primary driver of this bearish sentiment was President Trump's recent tariff measures, which have intensified international trade disputes. The administration's decision to impose substantial tariffs on imported goods, particularly from China and Europe, has led to fears of retaliatory actions from global trade partners. These concerns became reality when China promptly announced retaliatory tariffs targeting U.S. agricultural and manufactured products, heightening fears of a full-scale trade war. The gloomy market scenario was further amplified by investors' fears of an impending economic downturn. Trump's comments refusing to rule out the possibility of a recession fueled these anxieties, as investors perceived an acknowledgement of potential economic vulnerability. With companies already grappling with increased costs due to tariffs, the added strain of weakened consumer confidence and reduced global demand could trigger a broader economic slowdown. Financial experts highlighted that the magnitude of the Dow's drop and the Nasdaq's even more severe decline underscore the fragility of the current economic landscape. Analysts have voiced concerns that continued tariff escalation could lead to long-term structural damage, dampening innovation, disrupting supply chains, and ultimately hindering economic growth. Particularly vulnerable are tech-heavy indices, where companies depend significantly on stable international trade flows and consumer confidence. In the immediate future, market volatility is expected to persist. Investors will closely monitor responses from international trade partners, as further retaliatory tariffs could exacerbate existing challenges. Economic data, especially indicators of consumer spending, manufacturing outputs, and employment rates, will be pivotal in shaping market sentiments over the coming weeks. Moreover, Tesla's substantial decline serves as a cautionary tale for other high-value tech stocks, signaling potential vulnerability in sectors traditionally considered robust. Analysts suggest that unless a diplomatic resolution to trade disputes emerges soon, further stock price volatility is almost guaranteed. Looking ahead, investors are bracing for an uncertain environment. Short-term caution and a flight to safer assets like bonds and gold may define market behavior. Wall Street's ability to recover hinges largely on easing trade tensions and clearer signals from policymakers aimed at stabilizing economic growth. Ultimately, while the long-term economic picture remains unclear, investors and businesses alike face heightened uncertainty. Continued vigilance and proactive risk management will be essential strategies for navigating this complex financial landscape.